Most investors think that self-managing saves you money. You save the management fee, you stay in control, you cut out the middleman. But what most investors do not understand is that this is the cheapest line item in the whole deal. And the decisions that you make badly while wearing the hat of the manager could cost you 10 times more. This episode is about the gap between self-managing, what it saves, and what it actually costs. So stay tuned.
Welcome to Growing Empires. I'm Jennifer DeJesus, real estate investor and operator. This show takes you behind the scenes of how real estate assets are executed, managed, and positioned for long-term performance. Let's get into it.
Management fees are a rounding error, but the mistakes are not. People obsess over management fees. Meanwhile, they're carrying vacancies for weeks because they're slow to turn the unit, or they're leaving a bad tenant in a unit because having a tenant that promises to pay is a lot better than the vacancy. You could be renting below market and don't even know that you are because you don't have current comps and you don't have a pulse on the industry or the market that you're in. Any one of these things will wipe out your returns, and they will wipe out years of saved fees on management. So why do owners, investors, think that it's so important to self-manage? I've heard a lot of things over the years, and although I understand the concept behind why you might want to self-manage, what people truly do not understand is the losses that you're incurring because of the lack of relationships that you've built over the years. So let's break it down a little bit, because I think it's important to go deep on this topic. One of the first reasons that I've heard for why people self-manage is they want to learn about their properties and about management. Well, maybe if you want to enter the real estate industry and you want to be a property manager as a career, that would make sense to me. But if you are an investor who has a corporate job, you work a lot, or as a matter of fact, you have any job, maybe it's not even corporate. If you work outside of the real estate industry and you think that you can self-manage part-time or manage part-time, I'm telling you that you're making very big mistakes. Management is not a part-time job. So let's talk about what happens. You have a vacancy, or you have somebody that gives notice. And let's just say that they actually give you notice properly, because that doesn't always happen. But let's say that they do. And now you've got to turn over the unit. So who are you calling? You're calling your handyman? You're calling your friend? You're calling other contractors? How long do you think it's going to take to get that person to the unit to actually do the work? They won't even assess the unit most times until the tenant has vacated. So it takes a week or two perhaps to get the contractor or friend out to look at the unit. Then you'll have to discuss what kind of maintenance, repairs, turnovers you're going to do and the costs associated with it. And now it's time for them to get to work. How many weeks of vacancy have you already lost because you don't have the right processes in place that allow you to save in this particular area? You could be 3 or 4 weeks out. That's an entire month's worth of vacancy. So what was your previous rent? $1,000, $1,200? Well, you just had $1,000 or $1,200 worth of loss. Let's talk about cutting costs, because that's usually the next thing that happens with self-management. You're only going to do what you perceive to be necessary. And most times what an investor perceives as necessary is things that are like fire, life safety, the obvious things that are broken. You're going to fix those things. But do you have a concept of how to maximize revenue on a unit by attracting the right type of tenant? Again, this is one of those areas where I feel investors just make so many big mistakes. Sure, you could cut costs on your turnover, and I'm certainly not an advocate of overspending. And I've built an entire organization around making sure that our investors can keep their costs down. But if you're going to use your handyman or the guy that has the best prices, what is it going to cost you in days to rent? Because now your property is not going to look the best. And as an investor, you need to think about the tenant. What are they doing? How many units are they looking at before they decide on a unit? And could that be costing you greatly because your unit just doesn't show as nice as the other units on the block, your competition? So because you were willing to skimp on the renovations to keep your costs down, because you can see that this is a snowball effect that's happening, you've now created an end product that nobody wants, because every other unit in the market that your tenant is going to look at, your competition, looks better, feels better, and maybe even has more amenities. So that's another area where vacancies, the time creeps up and it just continues to get longer and longer. Now we're at potentially 2 months, maybe 3 months until you fill that vacancy. I don't know what your underwriting looked at when you bought the property, but I'm pretty sure you didn't assume that you were going to have 3 months of vacancy every time you turned over a unit. So this is just one of many, many areas where I find that investors make huge mistakes in the area of self-management. Now let's talk about the other side of it. Let's talk about what a successful, experienced property management company will do to save you on those specific fees. As an example, one of the things that we do internally to make sure that our investors are protected is we have all of our leases requiring a 60 days notice. Why is that, you may ask? Well, let me tell you. We do a 60 days notice because historically we can rent properties in about 20 days. That's kind of our market average, about 20 days. From the time that the property is listed to the time that we have a signed, executed lease and potentially a move-in, we're anywhere between that 50 and 20-day mark, right? So about 2 weeks. This assumes that the property is priced right, and it assumes that the property was cosmetically appropriate for the market, the price, and all of those things, because they do factor into the equation. But if it takes us 15 to 20 days on average, and we are requiring tenants to give us 60 days notice, that means that we have a whole runway of opportunity to make sure that we can stack tenants one behind another. Now, how do you actually achieve a turnover with no turnover? Well, you can do that as well. So in our units, because we require 60 days notice, those units are being shown while tenants are still in there. Sometimes if the tenants are good tenants and they keep the places nice, they actually almost look staged, sometimes professionally staged, because the tenants that live there take a lot of pride in the units that they are renting. As the new prospective tenants are seeing the property, assuming that it looks nice, they're going a long way to help you achieve that rental. Now, there's something called timeline and necessity as well. One of the things that we've created over the years is what we call an as-is move-in. Think about that as you're buying properties, as is, and you know what that entails. Well, we do the same thing on our turnovers. Why? Because we want to save our investors money, but we want to address the need for the population of tenants that might have some urgency behind their move. Maybe they couldn't find a place that made sense. Maybe they're at the end of their lease, or maybe there's some other urgency that's requiring them to move. So how can we address the potential needs of the population of tenants without losing that potential prospective tenant? And how could we fit the needs of the investor, which is to keep costs down when we're turning over units? Well, the answer to that is our as-is move-in. So as we are showing properties while prospective tenants are looking at units that already have tenants in them, there's a timeline of when that tenant is moving out, the current tenant, and then there's a timeline of when the new tenant needs to move in. If that timeline is very short, one of the things that we'll do in the application is we'll ask the tenant if they would be willing to accept the as-is condition to be able to accommodate their urgency to move into the unit. There's been so many times over the years where we have completely gone from one tenant to the next tenant with very little and or no turnover expenses, which financially benefits our investor, but also gives us a new tenant in the unit very, very quickly. So that's just one example of where your professional property management company can truly give you a leg up when it comes to vacancy. Now let's talk about timeline. So maybe we do need to turn over a unit. Maybe that tenant that was in there for a decade plus. Maybe it's time to really do some improvements to the unit. There's got to be some vacancy to be able to do that, because you're not going to do work in a unit while there's a tenant living there. So you wait for the tenant to move out before you do the work. Again, a professional property management company has the resources to be able to work like clockwork. They have the ability to get one in right after the other. If we know that a tenant is moving out today, and I've pre-scheduled this, a lot of times we can get our turnovers to start that very same day or that next day. Our goal is to always turn over units in under 2 weeks. Some turnovers may take a little bit longer depending on the scope of work, but generally speaking, if your tenant is moving out today, we are trying to turn that unit over inside of a week or inside of 2 weeks, depending on the scope of work, so that we can immediately get to marketing and then secure a new tenant for you. The other thing that we will do is market the property with the original condition pictures. Maybe not the pictures with the tenant living in there, but pictures that we had on the property from previous turnovers that show the unit in its best condition. We can use those for marketing purposes. We can still show the unit while the turnover is in progress. And the only thing that really changes is the dialogue. The dialogue with the tenant to say, we're currently in the process of turning this unit over. We want to make it super nice for you prior to your move-in. So as I'm showing this unit to you, please just keep in mind that we're in the middle of a turnover to make it pristine for you. Just ignore the workers' belongings, and let's try to look through this with a lens of this unit will be fully completed prior to your move-in. And that helps you frame it before they walk into what looks like a work area. And we can focus on things like room sizes and whether or not the layout is going to work for the tenant. So that's just one example of where true professional property management will save you thousands of dollars in vacancy costs over the history of your investment. So my next point is about you being emotionally compromised and not even knowing it. A self-managing owner is going to make emotional decisions. You're going to look at things solely through the lens of what is it going to cost me? And you're going to make decisions based on your income and your expenses and your profitability. What you will not understand is that there's going to be hard conversations. There's going to be conflict at times that needs to be resolved. And you could be over improving things because it's your baby, it's your first investment. A professional property manager knows the difference between over improving and under improving. And they don't just assume that because you over improve a property that you're just going to be able to get this fictitious rate for rental. They understand the market. They know what the market will bear, and they know what the fit and finish will be of the property for that market or that given rent rate. Those are things that a self-managing owner will not have the concept. They will not have the expertise, and they will not have the wherewithal to make the appropriate decisions. And when things get a little hard, you'll tend to space out your maintenance and your repairs and maybe your CapEx. Again, it's an invisible curse, because what you don't see is that your tenant now is no longer going to renew because you don't keep the property up, because you made an emotional decision about what is necessary on the property and not a decision that's based on what is best for the occupancy of the property. The other thing to keep in mind is that distance is not a feature, it's a gap. So if you think that you're going to drive to a property, oh, it's only an hour away, it's only 45 minutes away. Again, you're missing the fact that distance is not a feature, it's a gap. It's not being able to react to things as they happen. What is going to happen when you have a sewer line backup or a plumbing leak or an emergency in the middle of the night? Who are you going to call? A vendor that you have no relationship with? I assure you they're not going to get to your property in the middle of the night. However, a professional management company that has a tried and true relationship with a vendor or 24-hour service is going to be able to get to that unit in the middle of the night if necessary. What you're gaining from that is cost reduction. Certain emergencies, if not handled appropriately and handled timely, will cost you thousands in additional damage. So you want to make sure that not only you can address concerns with your property immediately, but you're not going to be forced into a situation where you're paying a premium for a vendor because you don't have a relationship with that vendor. And that you can actually get service in a moment's notice if you truly needed it. But if your answer to dealing with emergencies is, I'm going to Google it and I'm going to call a bunch of plumbers, or I'm going to call a bunch of electricians or drain line experts when things go wrong, again, I could tell you that this is one of those areas where expense creeps really do happen. What about your systems? Systems and technology are a whole game in their own respect. Think about AI. Think about where technology has been over the years. As a self-manager, how are you going to provide the technology and the resources for your tenants to have the ease of occupancy that they are accustomed to potentially from their previous landlord? How are they going to submit maintenance requests? How are they going to pay rent? And although there are services out there that allow landlords to have tenants pay rent online, you're not going to have all the systems and the technology and the things that professional property management companies have so that they can give good customer service to the tenant. Customer service is such a critical component of why tenants stay and why they renew. And not every tenant is going to get their way on every single thing. Sometimes you're going to have those tough decisions about delinquency and paying the rent timely, or a maintenance item that maybe is not going to be handled as urgently as the tenant thinks it needs to. But having somebody on the other line to provide exceptional customer service, to show your tenants that they're cared for and that their opinion matters and that we want them to be happy, again, is going to be the difference between whether they renew next year or they don't. You don't want the vacancy. A good tenant, a happy tenant, a kept tenant is the thing that keeps your investments profitable year over year. It's the annual or less than annual turnovers of units every year that are going to be costly. So who is going to be the person that's going to provide the customer service day or night? Who is going to be the person that's going to be smiling on the other end of the phone, even though money has to be spent for certain emergency repairs and maintenance? Who is going to be the one that finds alternate housing if your tenant is displaced because of an emergency? Who is the one that's going to have the difficult conversations with the tenants about paying rent? Who is the one that's going to have the resources available to them at their fingertips should your tenant be in a situation that needs some kind of financial assistance? Are you going to be able to have the resources to provide them with the information that is needed to bridge the gap between their current situation and staying in the unit long term? When you're able to provide services to tenants like the things that I'm describing, they will be lifelong tenants for you. They truly will trust that you have their back. They will trust that there's somebody that they could talk to when they're having a unique situation. And if you don't have these resources at your fingertips because you're self-managing, what do you think it's going to cost you? It's going to cost you a vacancy, a turnover, an angry tenant who potentially damages your units. And then there's the moment where we talk about being able to afford property management. If you bought a property and you did not have a line item for property management, you made a mistake when you underwrote the property. And that may or may not be something that you can overcome. But a good property management company will pay you dividends in their return on investment from so many areas, not only just vacancy and turnovers and maintenance and repairs and relationships, but a good, true property manager is going to be able to help you balance your expenses and your occupancy and the overall health of your building. Your time has a cost and you're pricing it at zero. The hidden line item that nobody counts for. Every hour that you're chasing a late rent payment, you're coordinating a repair, screening a tenant, it's an hour that you're not sourcing deals, raising capital, or building your wealth. Self-managers work for free and call it savings. But I have to ask this question. What is your time really worth? And what could you be doing if you were spending it on your highest value work that you could be doing? What would you be achieving today? Scale also exposes you. At one or two doors, maybe self-management works. But as you scale, self-management breaks. Self-management is the ceiling on how big you can go. So if you want to grow your wealth and you want to truly build a portfolio that's going to help you plan for retirement and help you live the lifestyle that you choose to live, then I urge you to look at self-management in a very different light. And I urge you to stay away from it. You can still learn all about investing in real estate. You can still learn about the day-to-day operations through the right property management company. And we'll talk about how to vet the right sponsor, vet the right property management company, and some future and upcoming episodes. But until then, what I want to leave you with is, what's your time worth? How are you going to scale your real estate investments self-managing? How are you going to keep from making the mistakes that so many people make because they think they're saving a buck by taking it in-house? And how hard could it really be? All we're doing is collecting rent and dealing with maintenance items. Well, I wish it was as simple as that, and I probably wouldn't need the large team that I have to run property management. But I have to tell you, in all the years that I've been in this business, 17 years later, we're still learning, and we're still making changes and improvements to make sure that we can weather every storm that comes along for our investors. So if you haven't taken an opportunity to really go deep and look inside the doors of property management to understand what that looks like, I urge you to do so. If you want to do some of your own research, you can just go to my website at jenniferdejesus.com, and I can show you all about our ecosystem and property management and why these things work seamlessly together and why they're so critical on a passive real estate investor's journey. Here are the questions that I'm going to leave you with. Am I saving a fee, or am I bleeding on vacancy, below market rents, bad tenants? Am I making decisions with my head or my heart? And what's the highest value of my time? And is self-management stealing it? The goal is never to save on fees. The goal is to make an asset perform. And performance is a discipline that most owners can't go at alone. I hope you enjoyed today's episode, and until next time, take care.
That's it for now. If passive income from real estate investments plays a role in your long-term investment strategy, this show is for you. Thanks for listening. And for more in-depth resources, please head over to growingempires.com.